Hello and welcome back from the weekend. I'm your market analyst Nick Nassad here with your Monday edition of CMS Forex News. Today is March 16, 2009. We begin our broadcast with housing news out of the UK, where the Rightmove House Price Index showed prices increasing 0.9% on the month in February, following a 1.2% increase in January. That kept the annual rate to a 9% decline, which was a slight improvement on January's figure. The pound-dollar pair surged in Sunday and then overnight trading, rising from its 1.3890 low to test above the 1.42 level, a change of more than 300 pips. Equities around the world continued their rally from last week, which helped boost risk appetite, with UK banks such as Barclays leading the rally in London. The pound gave up a good portion of its gains, however, in the New York session. The US stocks rose in the morning. They gave back those gains towards the end of the New York session. Still, the pound began falling even prior to that, and that decline was most likely led by a retraction to today's rally from a technical standpoint. In Europe, the final version of consumer prices for February matched the preliminary version, showing a 1.2% increase on the year. In January, prices were up 1.1%. On the month, prices rose 0.4%, breaking a streak of 3 months of falling prices. Fourth quarter saw employment decrease 0.3% in the Eurozone compared to the third quarter, while employment compared to the fourth quarter of 2008 was flat. Similar to the pound-dollar pair, the euro-dollar jumped higher today, fueled by risk appetite. From an intraday low near 1.2840, the pair surged to break above 1.30, the first time it's done so since February 10th. The pair hit stiff resistance around 1.3070, which was followed by U.S. stocks giving back earlier gains. By 4:30 p.m. Eastern, the pair was trading back below the 1.30 level. The euro-pound pair fell to the 0.9150 level in European trading, as the pound was boosted by its banking shares rising, as we mentioned before. That low acted as support that goes back to last Tuesday, and the pair counter-rallied about 90 pips to reclaim its level at which it started the global open. In the U.S., industrial production fell 1.4% in February, while the percentage of factories in use fell to 70.9%. It was the fourth consecutive month of declines and was led by lower output of computers and machinery. Output was down 11% compared to a year ago, which is the biggest year-over-year decline since 1975. The data points to a deepening slump in global business investment. In Canada, the capacity utilization rate fell to 74.7% for the fourth quarter, as factories and plants got shuttered down in the face of the recession in Canada. Back in the U.S., a measure of the housing market remained unchanged in March as the economy sapped demand from potential buyers. Those interested are also finding harder lending conditions. There is a first-time homebuyer tax credit in the recently passed economic stimulus package, and there is some hope that it can have a positive effect on the housing market going forward. The dollar-yen pair saw limited movement today. The dollar rose to test its high from Friday near the 98.70 level. After an initial drop to start the session, the pair was trading in a 50-pip range, which reflected pretty small volatility to begin the week, at least in this pair. The US dollar-Canadian dollar pair retested its low from Friday near the 1.2640 level after a 140 pip slide from its intraday high near 1.2790. From here, the pair traded choppy and consolidated, with the late burst of risk aversion that came in the latter part of New York trading, bringing the pair back up to the level at which it started the global session. Tonight, Japan will post its Tertiary Industrial Activity Index, and Australia posts its RBA meeting minutes. Overnight, Switzerland releases its quarterly industrial production data, the UK posts another measure of housing prices, and Germany and the Eurozone post their ZEW Economic Sentiment Index. Tomorrow, the US will release data on producer prices, along with its building permits and housing starts. Canada, meanwhile, will reveal data on labor productivity and its monthly manufacturing shipments. And that wraps up today's broadcast. Thank you very much for joining us here at CMSFX.com, and happy trading.